The US economy keeps defying expectations. It grew at a tremendous pace in Q4, 3.3% annualized, more than double expectations. President Biden and the US Treasury Secretary Janet Yellen both welcomed the news.
And just today we learned the economy of the United States grew by 3.1% last year. Well, thanks to the American people, America now has the strongest growth, the lowest inflation rate of any major economy in the world.
Though some forecasters thought a recession last year was inevitable, President Biden and I did not. Instead of contracting, the economy has continued to grow.
Inflation's fallen despite the robust growth, and it's raised hopes for a soft landing. And the S&P 500, it's pushed it to record highs. But it is still above target, give or take. Paul Krugman is the Nobel Prize-winning economist. He's here with me to put all this into perspective. So Paul, look, I'll admit I'm one of those people that Janet Yellen was talking about. I know you weren't, but I thought it was a racing certainty that there'd be a recession because of the speed at which rates went up. But now the soft landing is de facto baked in.
Yeah, I mean, we have soft landed. I mean, if we look at the Fed's preferred measure of underlying inflation, which is supposed to be 2% core PCE, for the last 2 quarters, it has been 2%. So we're right there. We're at full employment. I mean, there's always a risk that the economy could tip into recession, that there may be some lagged effects of those rate hikes. But right now, we are, pretty much exactly where we want to be.
What do you attribute the fact that we've had those phenomenally high rate hikes in short order, but growth has managed to, not has managed, it has been robust? Why do you think that has been the case?
Okay, I mean, the major answer is nobody really knows, right? That this has been, I didn't think we needed a recession. I was one of those people who thought that inflation would come down without one, but I would have expected more impact. Part of the answer is there are some Biden policies that have been boosting the economy. The green energy subsidies, the semiconductor subsidies have been promoting. We're getting a lot of manufacturing investment. Some of it is that people had saved up money from previous government programs. Some of it is, economists have a perfect track record when it comes to predicting recessions. They have never, ever gotten one right. So why should we be surprised that we kind of didn't quite, that in this case we predicted one. I didn't, but a lot of people predicted one. They weren't right. Well, when were they ever right?
So in the scenario we're now in, in your article, you talk about the vibecession, which has now become the phrase du jour. The vibecession, new phrase, what does it mean?
Well, it meant that, and still means, to given the economic numbers, given low inflation, low unemployment, you would expect consumer sentiment to be pretty high. People should be feeling pretty good about this economy, and they aren't. That's picked up a lot lately, but even so, particularly if you break it along partisan lines, if you believe Republicans, they tell surveys that this is as terrible an economy as the depths of the Great Recession, or that it's as bad as it was in 1980 when we had 14% inflation. So there's still a gap between at least what people say about the economy and reality.
Isn't one of the problems that when inflation comes down, all we're really talking about is the rate at which prices are going up? It's slowing. The actual price that people pay doesn't come down. So people go to the supermarket, and although the bag of sugar isn't going up as much, it's still a lot more than they paid a year or two ago, and that's what they remember.
Well, it's not much more than it was a year ago. I mean, grocery prices are up only around 1% over the past year, but it is higher if you look back 2 or 3 years. This whole people look at the level of prices thing, it's plausible, it makes sense, it kind of is what people say, but more I look at it, the less it's supported by the data. I mean, if we actually look at a variety of indicators, consumer sentiment started improving as soon as inflation started coming down. price increases under Biden so far are almost exactly the same as they were by this point in Reagan's first term. And as we remember, Reagan won a landslide victory on a good economy in 1984. So I'm not sure that it's one of those. It sounds right, but it isn't really supported by the facts.
Listen to Christine Lagarde, president of the ECB, speaking today. They left rates on hold, the ECB, and she scotched or poured cold water on ideas that the ECB may move and cut before the year.
The Governing Council today decided to keep the 3 key ECB interest rates unchanged. The incoming information has broadly confirmed our previous assessment of medium-term inflation outlook. Well, first of all, the consensus around the table of the Governing Council was that it was premature to discuss rate cuts.
The FOMC is much more willing to start considering rate cuts. When do you think, when do you think they will do? But bearing in mind today's numbers do suggest you don't really want to start cutting and risking stoking a good economy into an overheating one.
Yeah, there's a question of when they will and when they should. When they should, I think, is despite that strong number, they should immediately start cutting rates because real rates are really, interest rate adjusted for inflation is really, really high. And although that hasn't slowed the economy so far, you still have to say that's playing with fire. That is running the risk of a gratuitous recession, and inflation looks under control. When they will, we'll get a couple more inflation prints, but I don't think it's impossible that they'll do it as early as March. But they are a lot more data dependent than the ECB, although I would say not data dependent enough.
Good to see you, sir. As always, I'm grateful. Thank you very much, Paul Krugman.
Thank you.